Welcome to another episode of the Final Wealth Report. Hi, I'm Mike Feiner, and today we're going to help you stay ahead of the curve with some insights on taxes, the markets, investments, and public policy. As everyone knows, what's just been signed into law is the new Big Beautiful Tax Act, the BBB for short. Just signed into law by President Donald Trump, the Big Beautiful Bill kind of revises and reshapes dozens of tax provisions from the 2017 Tax and Cuts and Jobs Act, and it adds a few new surprises that we didn't expect in the bill. Whether you're an investor, business owner, or just trying to make the most of your personal finances, this bill has a lot in it for you. First, let's talk about the basics of the Big Beautiful Bill. It makes permanent a lot of the changes that were put into place in 2017. And that includes the permanent tax Trump era changes and standard deduction increases. What does this really mean? It means that for a married couple, you can take a standard deduction for up to $31,500. And it continues the personal exemptions at zero. There really are some nice wins for families in that the child tax credit is now $2,200 per child and indexed for inflation. In addition, $1,400 of that is refundable even if you don't pay tax. There's a lot of also talk about Social Security and that Social Security wouldn't be taxable. They really didn't do that in the Big Beautiful Bill, but what they've done instead is given a $6,000 additional tax deduction, which is available for taxpayers over age 65. One of the most talked about changes in the Big Beautiful Bill was the state and local tax cap known as SALT. It increases temporarily to $40,000 and currently it's at $10,000. So that is one of the biggest things that will impact people. So there's an additional potential $30,000 for people earning less than $500,000 a year. It gets phased out after that. That could mean a potential savings of anywhere from $6,000 to $10,000 for a married couple. Another very important talked about change is the tax on tips. So it may be that both tips and overtime may now be tax deductible up to $25,000 if you meet certain thresholds. So there'll be more to come on that. They're not totally exempt, but they are partially deductible. And for the first time in a very, very long time, car interest loans, the interest on the loans for car interest is partially tax deductible. And student loan discharges due to death or disability are permanently tax-free. Let's talk a little bit about businesses and whatnot. So there's something called the Qualified Business Income Deduction, Section 199A, which is a 20% deduction against certain business income for flow-through entities, LLCs, sole proprietorships, S corporations, and that is now permanent at 20%. There was talk that that could be up to 23%, but in the reconciliation process, it stayed at 20%. The biggest thing for businesses, I think, is now we have bonus depreciation, meaning if you buy equipment or certain even real estate or certain parts of real estate, not necessarily all the structural parts, but certain components, that depreciation is now 100% retroactive to January 2025. The old Section 179 expensing, which is similar to bonus depreciation, rises to $2.5 million. Research and development expenses are once again deductible in the year incurred for the domestic pieces. Let's talk about estate planning. The lifetime exemption is now $15 million per person. And that's very important starting in 2026 and has now become permanent. Let's talk about the new sort of surprises in the bill. The bill introduces the so-called Trump accounts. These are IRAs for minors, which will encourage long-term savings from a young age. So there's a $1,000 tax credit for opening one for newborns. There's also more generosity toward charitable giving. So if you don't itemize, and let's face it, 90% or more of the population now does not itemize, you can now deduct up to $2,000 in charitable contributions, even if you don't itemize. If you're going to adopt a child, there's up to a $5,000 tax credit for that. And they've made childcare expenses for daycare and whatnot much more generous now, having up to 50% of expenses qualifying. Before it was 20%. There has been a big pivot, which has been in the news, regarding clean energy and whatnot. The Big Beautiful Bill curbs a lot of the clean energy credits, including things for electric cars and whatnot. The Big Beautiful Bill also changes a lot of things for business relating to 1099s to include 1099Ks, where the threshold goes back to $20,000 in 200 transactions. And the 1099 changes from $600 to $2,000 if you happen to have a contractor or someone that you pay from your business. There's also a new 1% remittance transfer tax for individuals who send money overseas. So what does this all really mean? I would say it's a very powerful piece of tax legislation. There's a lot of room for tax planning at this point. What does this mean from a macroeconomic perspective? Well, we're probably going to save some of those thoughts for a future Finer Wealth report, but there's no question with the bonus depreciation and a lot of the business pieces of this bill that it should be stimulative to the economy in this first year. Over time, that will tail off, but this could add anywhere from 0.5% to 1% to gross domestic product, which tells us that we'll have some sort of tailwind from this fiscal policy into the rest of 2025 and into 2026. So again, I'm Mike Finer of Finer Wealth Report, and I just wanted to give you a quick update on the Big Beautiful Bill. If you have any questions, please feel free to give me a call at 978-740-1011 or michael.finer@finer.com anytime. We look forward to speaking with you soon. And if you have any questions, as always, please reach out and give us a call. Thank you so very, very much.